Digital Sourceman here. It's January the 4th, 2023. Right now, metal futures are up broadly. Uh, Noise, as always. I mean, yesterday I think they were up quite a bit and then they ended down. I think copper ended in the red. I still think gold and silver actually ended up. Even though dollar was up like 1%. But for whatever reason, the market started falling a bit, so it felt like there was all of a sudden a risk-off environment in the miners as well, gold and silver miners. Even though again, gold and silver were actually up, and with the dollar. So not only did the dollar price go up, but the price of dollars went up as well, and still that led to a risk-off environment. Like, I rest my case. Everybody, as soon as, I saw some juniors have intraday swings of like 8-10%. How on earth does that make sense? No, it's just more evidence that this market is totally clueless. Everybody is emotional risk or greed fiend. Because at one point in the same day, Mr. Market said, hey, this company I think is worth that. And, 3 hours later, all of a sudden it's worth 9% less or 10% less. 8-9% is what the market averages every year. So basically, the broader market, obviously, but like some junior stocks, especially, like they swung by the same amount that the overall stock market averages every year over a very long time. I mean, just think about that. That will never change. That will never change, because what happened when gold and silver was up at the beginning of the day? People didn't buy because they think the companies all of a sudden get worth a lot more. No, they bought because they thought they will go up tomorrow. Jesus, what's happening with anyway? Because they thought it would go up tomorrow. And when gold and silver started to go down, not in a, didn't go negative, it just went less positive. All of a sudden, people think, oh my God, it might go down tomorrow. So then they start selling instead. I don't think I did a single trade yesterday. Well, I think I added some Magna, because so far it's been kind of a principle to add just a small amount, because I already have so much. But to add any day that Magna is red, I've pretty much been adding. I think I might have added some other stock, but we're talking like 0.001%, trading in terms of the whole portfolio. So basically nothing. I don't do anything. So I don't care what it does, what the stocks do on any given time, because typically my time to take profit is maybe 50 to 100% higher on average for any single case. And if we're talking macro, but the Bear Creek Sentiment Index isn't even close to being at a frothy level. But that doesn't matter. It doesn't matter. I don't know what is happening with this computer. It really doesn't matter. Nobody has a long-term perspective. If they think a stock is going to go down tomorrow, they'll sell. If they think it's going to go up tomorrow, they'll buy, regardless of where it is. And I think it's just better to assume, like, if metals are up, assume they'll be down the next day. If the metals are down, assume they'll be up the next day. That's gonna, that's directly contrary to how everybody else thinks. So just to have that as a standard outlook, I think that's actually pretty good. Let's look at some companies. Pacific Ridge, I haven't talked about them in a few weeks, I think at least. This is an interesting case of why I, kind of like financings, simply because they create so much volatility, and for some reason people think dilution is the worst thing ever, even though it's like, hey, how on earth are they gonna drill something up if they don't dilute? But still, it's like every time it happens, like everybody's surprised that they need to take in more money. Oh my god. Oh my god. I mean, the whole point is, as long as they create more value than they take in, accounting for dilution, I mean, that's still a net positive anyway. And you couldn't even drill more if you don't have any money. So, I mean, kind of goes without saying. They recently received 500,000 from a, what in the world? From a Fire Lake payment. So as it says here, they now have approximately $7.3 million in the bank. Right now, I think this is updated with the closing of the 6 million bought deal. So it's they have warrants out, etc. Though, but right now 7.3 million in cash. Let's say 7 and 25 million market cap. So that's like 18 million in enterprise value right now, not fully diluted. They have one of the biggest copper pipelines around. 1, 2, 3, 4, 5 targets. They add? Okay, yeah, identifies new porphyry target. And Antofagasta is working the RDP project. It's just, in my opinion, mind-bogglingly cheap. Clayula obviously is already a discovery. RDP, I guess, could be considered a discovery and working with earning with a major. And you have, Freeport and Centerra, Northwest Copper. Yeah, it's just crazy. It's like, this is prime ground. They pretty much have 2 discoveries already. And it's priced like an ordinary, what any microcapper would be trading at higher sentiment levels. Even, I mean, in a high sentiment environment, back in 2016, 2020 maybe, there was barely a junior that was trading cheaper than this, and they did not have, a major earning into one of their projects. They certainly didn't have a bona fide discovery already, etc. It's just, yeah, pretty much brain dead cheap, but that's the mining sector for you. The idea of this sector being rational or efficient or whatever is like, no, it's completely untrue. So now it's back to, I guess, what appears to be pretty good support levels, and it's like dirt cheap, so who cares? But it broke down below this trend line. Probably that's why traders, it's just fascinating how many people almost everybody has an opinion on trading. Like, yeah, I'm not gonna buy now, whatever, I'm gonna sell because it broke down. I don't think any of those people make any money, really. If I had to guess. I don't know what kind of money they're... I mean, somebody who just... Hey, I think, Pacific Ridge is very cheap, whatever. Just bought more the lower it went, kept their position, etc. I mean, they make more than the traders who... typically, I think that go in with 1% of their position and might be riding, getting 15% here and there, and it's like, yeah, how are you gonna make let's say big money? And personally, it's like, I don't even like the idea of trading. If I had to choose between, earning 25%, let's say, per year, if you had to be an active trader, 24/7, or it's like, you have to be constantly aware of where everything was trading, instead of being just a hodler and earning maybe 20% on average per year, and have loads of free time, no real stress, etc. I would take that, because from what I hear, or from what I've read, it's like a lot of traders got blown out last year. A very stressful year overall, and everybody's talking about, what's the macro environment, what's the Fed gonna do, yada yada. You have to be on your toes. Like, that's not a high quality of life, in my opinion. I'd rather be a hodler. Yeah, anyway, I think Pacific Ridge is really cheap again. Like, as always, there's no guarantee that they will prove up a big copper mine, but we sure know that the world needs a lot of copper, and British Columbia is, one of the few places where really good porphyry copper deposits are found. So I like this as a high risk, high reward copper junior, and again, especially at these prices. Then Timberline, haven't talked about this in a while. It's been a while since, well, they reported some more assays over a month ago. They were a bit, 16.8, 2.64 grams. That's, pretty good for, I mean, it's a bit deep though, but I had hoped for more, obviously. $29.5 million. I mean, I recommend anyone who owns Timberline or has it on its watch list to watch this presentation, because it's typically what I really like is, like, I'm not a geologist. If there's a good management team in place, they understand everything much better than myself. And in this video, Patrick Highsmith outlines that there's a bunch of targets left, and we also know Oswego. I mean, this is pretty much, as you can see here, this is kind of the continuation of it's in the Eureka area, in Eureka district, and just to the north here you have I-80, which we know has a bunch of success, and this is basically the continuation, and they have 3 trends. What's this trend called? Lookout Mountain trend, Oswego trend, and there's the Windfall trend up here. A lot left to explore. I think they will find more stuff, but it takes time. It's a process, like always. I think there's more holes left to be reported. 20 holes recently completed. Yeah, I think, yeah, and it's nicely under budget on cost. I think there's more holes to be reported. I think this is one of the better gold exploration stories. I mean, they already have over, I think, 600,000 ounces. That's not a tier 2 or tier 1 deposit or anywhere close to that, but there's a lot of smoke in this district. So with more time and money, I think they will start to find something, and they also hit some. They haven't tested this IP anomaly at all, I think, first of all. And they have this, silver mineralization popping up. Obviously not economic grades, but there's smoke there. Yeah, I think this is more of a wait and see. I don't think it's super cheap, but I don't think it's expensive. I have all my shares that I bought in the last private placement. Obviously, sentiment is not that good, as you can see, which goes for pretty much every junior gold mining stock obviously, but prime jurisdiction Nevada. If you find gold there, there's going to be worth much more than, or more gold, I should say. It's going to be worth more there than pretty much almost any other jurisdiction in the world. So I'm hodling Timberline. I think this district has plenty of room to grow yet, for obvious reasons, and there's a bunch of high priority targets, and it's not expected. We know how snaky these high grade zones can be. I mean, they might disappear in one place and then come up, and here's they have very good geologists. That's a very big positive, and they have a structural geologist. So it's like they're still figuring stuff out, and obviously you learn more the more you drill, since they are good at interpreting. I don't know if I said that correctly. Figuring out the geology. Let's just put it like that. It's a early morning, so I'm a bit tired. Nevada King, they did a massive news release with a lot of news, or a lot of info. Nevada King reviews 2022 achievements at the 100% owned Atlanta gold mine project, develops a new geological model, and identifies a number of high priority targets. They've had a lot of good real success, and they have a bunch more targets now. This is a bit low resolution. North extension target, east ridge target. These are northwest high grade target. I mean, they're talking about finding the potential feeder zone, etc., and this looks to not have been tested at all, and this pretty much is wide open. Here I bet they have to drill more, because like we've seen, they hit mineralization directly underneath the old pit, for example, that was not expected to be there. So it just goes to show that even, I mean, some of these past producing mines, people didn't really, well, the operators at the time didn't really figure out the geology, let's say. So I mean, that's what Nevada King has shown, that hey, there's a lot more to this story than what the small amount that was actually produced. And we know Quinton thinks this could be a 2 million ounce deposit. If that's oxide gold at relatively high grades, which they are finding, that's very rare nowadays in Nevada, because almost all oxide gold, which is cheaper to process, tends to be have been mined already. And of course, in my opinion, a big thing with Nevada King is the fact that, first of all, Colin owns a bunch of stock, so you have a lot of skin in the game, and they have brought on people from Barrick, etc. So it's like, yeah, okay, I know Colin worries more about value creation than probably anyone else out there, and he's put a bunch of good ex-Barrick geos in charge, etc. And obviously you can't complain about the information flow, because there's a lot of information in here. I mean, a lot of it is above my pay grade, but obviously it sounds like, I mean, they're having success, they're figuring out stuff, thus they're having more success, etc., etc. So I expect this to grow. And here we have Cattell stated, as we enter the new year, we will take the findings from our 2021 and 2022 drilling and continue to apply them in our search for gold. An oxide gold system in the world's #1 mining jurisdiction is a rarity, and we believe that we are in the midst of such a discovery. As such, I believe that the market is only starting to value the impact of these recent successes. Nevada King is looking forward to an even brighter 2023. On behalf of management and the board, I would like to thank our entire team, with special thanks to exploration manager Cal Heron in his tireless effort to unlock the potential of Atlanta. Right now, Nevada King has a market cap of almost 95 million Canadian. They have, I think, still a few million in cash. What could, let's say 2 million ounces, 1.5 to 2 million ounces of oxide gold at good grades in Nevada be worth? I'm not 100% sure, but I would guess several hundred millions if they did a economic study on it. Just my guess here. So I think again, it's like I think this market cap is already underpinned by how good the Atlanta gold mine looks, and we know that. Uh, I mean, Colin put together, I think, the third largest land package in Nevada. And they're gonna be testing more targets. I think they're drilling Lewis right now. Well, Nevada King completes phase 2 drill program at Lewis project. Test 4 high priority targets. So let's see if anything comes out from there. But that's what I like, let's call it, free upside. Because if they miss on everything else here, or get nothing for it, I don't think you're overpaying just based on the Atlanta gold mine, for example. And if we go into a really hot environment, I mean, gold is rare and all, but it's like prime jurisdiction, prime ground in a prime jurisdiction is much rarer than gold. Because there's only a limited amount of land in the Battle Mountain Eureka Trend, for example. And Nevada is just one state, which happens to be one of the absolutely best mining states in the entire world, and the best one in the US. So yeah, I think I really like the risk reward in Nevada King. I think it's a very prospective hodl story, much thanks to there being margin of safety, because it all pretty sure we know they have gold. I mean, they have a historic resource, and we know that it has grown with the recent success. So you'll never end up with no gold in Nevada King, and potentially there might be a pretty good mine at Atlanta Gold Mine, and then you have all the other stuff for free. So you don't need to buy any future growth potential in if you go into a full-blown bull market, they already have all the potential growth pipeline they will ever need. Cartier Silver, kind of a new story. What was the old name? Cartier Iron, I think. I own shares of Cartier Silver. I bought some in the recent placement. I really like Tom Larsen. I mean, we know what he's done with Eloro. They actually had they have it still, a good project in Peru, but I think it was hard to get community agreements there, or something like that. I think, what's it called, the Virginia project? I think so. Then they, got in touch, or yeah, I guess they knew each other already. But Dr. Osvaldo Arce, who's a Bolivian, basically wrote a book on Bolivian deposits and systems, and he suggested Iskay. Lo and behold, Iskay turns out to be a massive polymetallic system, which might also have a big tin porphyry as a source, which is yet to be flushed out really. But Santa Barbara alone looks absolutely massive. I think at the end of the day, that system will be just the Santa Barbara area will be well north of 1 billion ounces AG equivalent. I don't know what the maiden resource will be, but I'm assuming it's going to be somewhere between 500 million ounces to 1 billion ounces AG equivalent, if I had to guess. I think Eloro is cheap. So obviously Osvaldo knows what he's talking about. So Tom asked Osvaldo if he had some, ground that would be of interest for Cartier Iron, and they did pick up. Their legacy projects are iron ore project, which already has a 531 million ton resource in Canada, Labrador through Canada's premier iron ore mining district. This project came about from, I think it was Champion Iron or something. Tom was actually a founder of Champion Iron, and today it's, I think, a $45 billion company. And then Eloro, which right now is trading at only 250 million, but it's like massive discovery. And so again, I really like Tom. He's obviously very good at creating value, and I think he runs the companies very well. I think he's done a really good job with the Loro. And Bill Pearson checked out the projects down here. They're southeast of Iskaiska. And as you can, if you listen to his interview, yeah, I think it's this that Nils Holgersson has linked. Pearson to Larsen, lock this land up. Yeah, okay. So, and he talks about that Bill Pearson, went down there, and he's the geo for Eloro as well. And check these out. They are small land position, at least Felicidad and Gonalbert. But apparently, I mean, obviously Bill Pearson, he's a very, grizzled geologist. He's worked on really, really big mines, leading the exploration at Iskaiska, which is also a major discovery. So if he says lock this land up, that's not just some, armchair geologist saying that. So that has me, kind of excited. And they have some more. They have some more land as well. They have CSB 13 here, CSB 1, CSB 2, which are bigger land packages, but these are kind of de-risked. And we can read here: small artisanal mine recovering high-grade silver from a galena vein. Production reported to be 20 tons per day at 200 grams Ag per ton. Good grades, not bonanza grade, but good grades. I think they sell this to Glencore, the concentrate to Glencore. So this is kind of a, it's de-risked. I mean, they're literally producing metal from the Gonalbert area. I don't know if Felicidad is actually, well, part artisanal mining excavated silverish galena veins and vein bridges. Reported grades around 230 Ag per ton. And similar to Gonalbert. So again, these are bona fide, discoveries. I mean, this is not grassroots exploration because one claim is being mined and the other one has been mined on and off, and then they have more land package. And they also have the Big Easy project. Big Easy project here that's in Newfoundland, right? Which is also being a bit shelled right now, but they are actually keeping all the. I think that's 92.3 square kilometers. So there's a pretty big land package, but those are in the back burner. But they have this. I mean, this is kind of a backup value, let's say. 500 million tons of iron ore, and I think they have owned for 55% of that. And they own 100% the Big Easy property, and now they have, joining Eloro down in the tin belt of Bolivia. So I like Tom. He has shown that he knows how to create value. Bill Pearson is a mine finder, or a really good exploration geologist. And you have Dr. Osvaldo Arce, which basically knows everything about Bolivian deposits and systems and geology. He wrote a book on it. Here it's kind of cool. You can Korolk, or however you pronounce it. I think that's a pretty famous mine actually. That's the peak here. Here you have Iskaiska, then there's Felicidad. So you are in major mining belt, obviously. This is. I mean, I like stories like this because I know Tom runs knows how to run companies, etc. And I know there's superb people involved with Bill Pearson and Dr. Osvaldo Arce. So I can't ask for much more than that. So this to me is kind of a high risk, high return hodl story until something changes. Let's say I'm really looking forward to learning more about what they have there and what they're actually seeing there, and I think they should. They're gonna be drilling in not the too distant future, maybe a month or 2 months left. Diamond drilling to test major targets outlined to start in Q1 2023. So basically, they hit the ground running immediately, which makes sense because they know where they know where there's mineralization already. Not a big bet for me. It's just one of those cases where you kind of know that time is on your side. If there's something there, they're probably gonna find it. We know that Tom typically takes care of the share structure, know how to push projects forward and raise money and all of that. Can't ask for much more than that. I wouldn't call it, I don't think it's super cheap at 27.3 million in market cap, but it's like not obviously expensive either. So yeah, I again, it's like in 2 years this will probably either be a multi-bagger or it's gonna be down. That's just how it is. So if it works out, maybe it becomes something really good and you can just toddle it from that perspective. But yeah, I guess just to be, sum up, I'm not piling in here. I think I'm locked up anyway in the actual private placement, but I have no real, let's say, strong stance right now in terms of an obvious buy or whatever. It's not a core holding. It's one of those, again, it's like a peripheral holding. I might have, I don't know what it makes up of my portfolio, but obviously it has revalued a bit since it's up from the private placement. But I'm, well, in my case, I can't do anything but sit put in it. But the major point here to make is that my core holdings, let's say, make up maybe 80% of my portfolio. The more de-risked ones with probable growth, etc. Then I have a bunch of higher risk, higher reward plays. And a lot of them, especially now in light of a 2-year bear market, they're down. So let's say they're on average down just in the last 2 years, 60%. And that's okay. I mean, in this business, the best investors might have in a less risky business might be right 50% of the time. In this business, success is much rarer than 50%. But the ones that do make it can obviously do wonders. And then we obviously have the fact that the overall market doesn't have the kind of crashes as we have in the mining space. Here, every 8 years or so, stuff goes down 80 to 90%. That doesn't happen typically in the broader market. And the bear markets, right now mining space, well, recently it went down for over 2 years. And that has happened, 2 years earlier, that happened again, etc., etc. I mean, when it peaked in 2017, it went down to 2019. You don't typically see that in the broader markets. So while success is rare in this space, you also have prolonged downtrends or bear markets, and they come pretty often. So even if something is kind of a success, if you're in a fat bear market, like it happens now and then in this sector, you're not gonna have those outsized returns typically. But when this sector turns around, you'll make money in everything pretty much. And all of a sudden the success stories will then pay off. So it's just a lot of the time it's just a big waiting game for sentiment to turn around. And that means that it's okay if you're down on 90% of stocks over the last 2 years. It really is okay. And I've shown this before. I have had my portfolio go down 50% 4 times or something since 2015. And that's okay, because when it turns around, they'll go up more than 100% from the bottom. And the bottom might already be in. That's how this sector works. But everybody thinks they're making terrible mistakes if they're down 50%. You're not making terrible mistakes. Other people are making terrible mistakes. Yeah, I just want to throw that out there because I can't stress enough how ridiculous this sector is. Like, okay, Magna Mining. Yesterday nickel was up, I think, around 6% at one time. You can only imagine what, the intrinsic value of a potential near-term nickel producer like Magna Mining would change based just on that, and we're already at very high nickel prices. So I mean, without it going up 6% yesterday, I think it ended up going up 3%. Anyway, it's like, yeah, Magna was up 6% at one point in time. It ended down 4.5. I think it was down 5 or 6% at the low. Again, that's a 10% swing on a day when nickel went from +6 to +3%. So maybe, on paper, with that 6% rise, maybe Magna Mining's NPV, all else equal, went up 40 million or something. Still, the stock ended down. I mean, this, you can't take this here. This is I love this sector because it's so stupid. It is so stupid, and people are trying to guess. When is the will it hit 70? Bidders at here. Where was I? Anyway, it's like guessing, oh, will we hit 70? Will we hit 80 or whatever? It's like, this stock should be 100% higher already. So who cares? It's like, I have no idea who sold this here. I have no idea who sold it down here. But I just added, and then I added again. And I added some yesterday. Not big amounts because my position is huge. This is my point. It's like, if you have a really solid case, long-term case, it's no-brainer cheap right now. Why on earth would you trade that? And maybe some traded, and believe me, nobody picks the tops or the exact bottom. So maybe some guy got in here and had an 8% return on 1%. I mean, I've just been adding. So everything I own here, I own right now. So that's up, I don't know, 80% core, whatever. I had some stocks already before, and I've just increased my exposure, and the actual position has increased in value. Magna alone has I don't know how many other units that are down over the last 2 years. This has already paid for one stock. But if I were to trade this, get in with 1% position, get maybe 10%, maybe I'll get 10 here, and you're like, yeah, I'm the man. Again, it's like, yeah, you're not even close to what someone would have made who just understood that, hey, this should already be 100% higher. I would be stupid to just trade this for a 10% flip when the expected returns 100% easily, let's say, and you take a fat stake instead of a 1% trading position. But that's just how it is. That's just how it is. Most people waste opportunities. So even if you're right, you don't really make a lot of money, typically. Yeah, I don't know. It's just I just find it a bit mind-boggling. It's like, in my opinion, and Magna still is I think the best risk reward I know of. Even though it has gone up in price, I recommend just reading the presentation. Again, it's like, yeah, okay, they have like 50 million tons. It's probably they're probably gonna find even more. They might make footwall discoveries near producing assets. Might be toll milling at these prices. Their cash flow could be bonkers relative to the market cap. Maybe it costs 25 million to go full toll milling. Still, it's like they're probably gonna pay that back in a hurry at these nickel prices. So it's just, yeah, absolutely one, in my opinion, one of the most obviously undervalued, just based on where they are or what they know right now. And they are actually maybe 12 months away from starting to monetize the value. So it's not like a trading sardine where, yeah, I know it's, worth more than that, or probably, but who knows if they will ever get into production, and there's nothing to force out the value because they can't put it in production because the capex is too big, or they can actually never get any permits. So it's like, it's in the twilight, so you never know. That's not the case with Magna. They have a very good shot at actually monetizing the value. So it's like, if this is really undervalued right now, and they actually monetize that in the next 12 to 24 months, that's gonna kind of force up the undervaluation. I mean, it's gonna make it so obvious that it's not gonna trade at a market cap like this anymore. So in my book, it's like, why on earth would you trade that? Why on earth? It's like you have, it's like you're sitting on, let's say, a 200% win ticket, and you trade that because you might get 220 if you're lucky. It makes no sense to me. But a lot of stuff don't make sense to me. Yeah. Anyway, these are some juniors that I think is like, well, you can't. I mean, either a stock is overvalued or undervalued. It's never fairly valued. Pretty much never a stock is fairly valued. So at any point in time, it's either undervalued or overvalued. I would say Pacific Ridge is undervalued. Okay, so by definition, you're not making a mistake. Not saying making a mistake buying it. Not saying there's a guaranteed success. It's just that it's too cheap. You get too good odds, or you make too much money, given the odds are, I mean, if there's a 95% chance of failure, maybe it's not cheap. But if there's only a 70% chance of failure, maybe Pacific Ridge is super cheap, and they got like 4 or 5 projects, whatever. Timberline, we already know they have gold, etc. I wouldn't call this expensive at all. It's like, locked up a good chunk of the Eureka district with gold at 1860 in Nevada, in a world that's growing increasingly more chaotic. Nevada King, it's like probably 1.5 to 2 million ounces high grade oxide gold in Nevada as well. Massive, absolutely massive, project pipeline, and they're drilling at Lewis right now as well, or have already drilled. I think that's cheap. I think there's a good margin of safety because, let's face it, we know they have gold. We know they have quite a bit of gold. We know if they have 1.5 to 2 million ounces, that's probably going to be worth of several hundred millions, and then you have free upside on top of that. So I would say margin of safety, risk reward, risks to the upside. Magna, in my opinion, immense risk to the upside. Well, it's already very cheap based on what they have. I mean, I just redid the calculation to AU equivalent. I think they're 50 million tons or whatever is like akin to 8 million ounces of gold at a grade of, well, I don't remember exactly, but it's like 6 to 8 grams per ton gold. And let's say you have I mean, if this was a gold company, this would for sure not be trading at 125 million Canadian. So it's like thanks to the market being so unaware, or retail investors being so clueless to one of the absolute hottest critical minerals around right now, you can buy this for 125 million, and that's why it's my largest position. So thanks to Mr. Market, like yesterday, somebody sold more Magna than people bought, or there was more selling pressure than buying pressure, even though it was, good churn of volume. I think the 839,000 shares that were sold were mistakes. I think the 839,000 shares that were bought were people making good decisions. That's just my opinion. There's always going to be winners or losers. And again, it's like, this is why I love this sector. I love it because people actually sold down Magna here, and I was able to buy more. Somebody sold Magna here. I was able to buy more. If I were totally rational, I would get everything in as soon as possible. But it's like, yeah, it has grown on me. I loved it already here, but it's like, yeah, the more I think about it, the more I like it, the more I'm comfortable with having a bigger position. And if you didn't have days like, yesterday, where a company that's already extremely undervalued sees nickel and platinum, for example, go up, and still it gets sold off. It would be fine if this was overvalued and it's sold off, because then it shouldn't matter. If it's overvalued, even with nickel up 6%, it should go down. If it's undervalued and nickel does nothing, it should go up. If it's undervalued and nickel goes up, it should certainly go up. It did not go up, it went down. That's why you can beat this market. Because this market is absolutely clueless, because it's mostly driven by retail investors, and no retail investors really make any money. 95% of the buys and sells are done by people who lose money. That's something to think about. So if you're not a completely worthless investor, etc., you shouldn't really care what Mr. Market does on any given day, because odds are the one that is either buying or selling from you is a money-losing investor. So why would you? Because the marginal investor is a money-losing investor. Anyway, consider me biased. I own shares of all companies I mentioned. I think PEX, Timberline, Nevada King, and Magna are banner sponsors as well. I own shares of Cartier Resources. They're not a banner sponsor, but consider me biased with all these cases. No guarantees of success. There's only risk reward. Do your own due diligence. Don't bet money you cannot afford to lose, even on paper, even for a short period of time, etc., etc. Thanks for listening. Bye.